Brady, thanks very much. The Wall Street Journal editorial board warns President Trump against an economic bailout in Iran. Stephen Moore joins me now. All right, Steve, just a big picture. What should dictate our policy in Iran? Politics or economics?
Well, it should be a little of both. But here's the situation right now, and this actually dovetails well with what Brady was just talking about in terms of what's going on with fertilizer prices. You know, fertilizer and oil have been the things that have been most impacted in terms of the hike in price. It's hurting farmers, it's hurting truckers and motorists. And so the big issue now is how long is it going to take going forward to get that Strait of Hormuz open? Right. And so what I'm saying is if Trump, and I don't know the particulars of the deal that Trump is trying to strike with the Iranians. I don't know. I'm not privy to that information. But if the outcome of this is we get the Strait of Hormuz open, so the commerce is flowing again, and we have dismantled Iran's nuclear arsenal, I think the vast majority of Americans would view that as a victory, Stuart. And more importantly, because this is a finance show, that would be very, very bullish for the markets.
Yes, understood with the market, but what about with voters? How long is it going to take to get back to $3 gas or, I don't know, $3.90 gas and fertilizer coming down? It's not a question of weeks, is it? This is months, isn't it?
Yeah, probably. That's what I'm hearing from oil traders, that it's probably going to take several months to get oil back down to, even $3.50 a gallon. Remember, we were at almost $2 a gallon back in January and February. So are we going to go back to $2 a gallon gas? I doubt that anytime soon. But look, even just getting the gas price down to, say, $3.50 a gallon would be blessed relief for travelers. It would be very bullish for the economy. And look at what's the oil price at now? Last time I checked, it was below 90. So that's a vast improvement, over $105 a barrel. What I'm saying is I think this looks like it's going to be a very positive outcome. Maybe I disagree a little bit with the WSJ editorial today. Americans want to get this thing resolved. The most important reason we started this conflict with Iran was to dismantle their nuclear arsenal. And it appears that that is exactly what we have accomplished.
White House National Economic Council Director Kevin Hassett, he's very optimistic about the economy. Listen to what he told Maria earlier this morning.
All that kind of pent-up demand is going to be layered on top of the numbers that I talked about. So I really do think you could see a quarter like that. And it's not unprecedented. The last time we saw an economy that looked like this was in the 90s, when all of a sudden the internet was changing everything.
You know, Steve, he is wildly optimistic about the growth rate of the American economy in the future. I mean, do you share that optimism?
Not quite as much as Kevin does. And by the way, Kevin's a good friend and he's a great economist. He's saying we could get 4, 5, 6% growth. I kind of doubt that. But look, if we can just get 3 to 3.5% growth, which we're very capable of doing, that's a big shot of adrenaline for the U.S. economy. So you've got two conflicting things going on right now that are driving the future growth of the economy. One is you've got the AI revolution, which is, as I've said many times on your show, the greatest increase in productivity in maybe the history of the world. On the other hand, you've got a shrinkage of the labor force. In other words, we have fewer immigrants coming in. We have 11,000 Americans retiring every day, but only about 8,000 Americans joining the workforce. So a smaller workforce, reduces the amount of growth, but productivity improvements increase it. So I'm going to say, Stuart, 3 to 3.5% growth. I know Kevin's at 5. I'm a little lower than he is.
I think a lot of people will be very happy with 3% growth, and that's a fact. Steve Moore.
Exactly.
Yeah, all right. Thank you, Steve. We'll see you soon.